To Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live discussion of our weekly strategy roundtable where we talk about Tradespoon tools, Yellow Tunnel website, current market conditions, and any questions you might have about your subscription. Before we begin, I want to welcome new subscribers. If this is your first live event, do me a favor, just type in first. Always want to welcome new subscribers. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express. From its inception through 2007, Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion, so I'm very proud of that experience. Since I left Options Express, I work as a consultant and investor in several financial technology firms here in Chicago. I want to say thank you to all the Tradespoon subscribers. Started Tradespoon 2012 because of you. Because of Tradespoon members, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years, mentoring and teaching Tradespoon subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and science. Disclosures: trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. All right, trading system. Before we get into a trading system, let's talk about current market conditions. All right, let's see, let's go to bar chart. So again, the biggest news is everybody's waiting for the phase one agreement. Tariffs are due to go up on December 15th. So we have another week before the announcement. Every day we have a news in terms of how close we are to the agreement. Seems like there's still talks about the phase one agreement are still in place, kind of final round of hashing out the details. Nobody knows exactly what's going to happen, right? It can break down the last second, or we can sign an agreement, or we can sign an agreement, start talking about phase two agreement. So at this point, market is up nicely, close to 1% on the monthly November unemployment numbers. So strong employment. Companies are continuing to hire people. We are retesting 52-week high around 315 level. I personally think that 315 level is here to stay. Short-term support is at 307. When we had negative news about the phase one agreement, market sold off 2 to 3% now to recover to 315. I think this for the next week this action will continue, and then potentially, assuming that phase one agreement either is going to sign or at least the conversation will continue into the next year, then usually we are entering a very bullish period, Christmas, holidays, and potentially the last 2 weeks market can break out of this overhead resistance. I would consider both scenarios. If we do sign phase one agreement, what will your portfolio look like? Go through these positive and negative visualization rehearsal exercises. Close your eyes, imagine, you're coming back on Monday after December 15th, and market, is at 308, or not 308, or 303. If we don't sign an agreement and fall, and the tariffs are imposed, and the talks fall apart, that is a negative scenario. I don't know what the probability of that scenario is. I think it's, at this point, it seems like a small probability, maybe 20%, 30%, but it's not a probability that you want to ignore. So look over your portfolio, see how many positions you have, what your portfolio drawdown is, how much cash you have, and adjust your portfolio accordingly. Or imagine that we do sign phase one agreement and tariffs are rolled back and market is at, continues to make new highs and, 317 or 316 level. So those both scenarios are very important to consider. We have 1 week to review. As of right now, there is no evidence that, that market is gonna fall apart, right? We're continuing to see weak US dollar, right? US dollar is down, continue to make new lower highs and lower lows below 50-day moving average. So I would keep an eye on US dollar. Treasury, that kind of an indication where money are going, floating, and money are going into cyclical sectors, right? You can see treasuries are down, you can see US dollar is down, you can see utilities are underperforming. So you have defensive sectors are underperforming, except maybe consumer staples continues to underperform the market, but nonetheless at all-time high, right? Making all-time high at all the earnings. Russell 2000 makes new highs, leading the market, right? We have a kind of a clean breakout from the 50 all-time high. Continue to make all-time high Russell 2000. Semiconductors, technology is another strong cyclical sector, continues to make all-time highs close to 52-week high. Industrials had a nice recovery from the sell-off. Back to trying to retest 52-week high. Materials and energy, dependent on the signing of the agreement, also broke out of this downtrend momentum. So cyclical sectors are leading the market short term and defensive sectors are lagging. And as long as that's the scenario and you don't see breakout in these sectors, then the assumption is that market is going to continue either trade in the range before the announcement or potentially break out of the range either end of this year or beginning of the next year. Very important to deal with the trading psychology. So Yellowton is a sister company of Tradespoon specializing in trading psychology. The site is free. All the webinars and all of the blogs are free. The only not free is this new service, Aggressive Power Trader, that we just launched. But other than the tools, the webinars and the trading psychology part is free, and I encourage you to participate in the webinars. We have end of each month we have webinar. Next one is actually on December 18th. On December 18th, I'm going to put on the new topic, but at 3:30 Central, we're going to have Dr. Maneker presenting every month. He covers different topics in trading psychology. He's a clinical psychologist, licensed clinical psychologist. He's also a professional trader who trades full-time, and he's also a one-on-one coach. So his perspective is extremely valuable, and I encourage you to participate in these webinars. We did record this webinar, development stages of trader psychology, and I encourage you to review this webinar. It's a very important, that helps you deal with different, making sure that when the level of uncertainty rises, like we are faced with phase one agreement, that you at least are self-aware, you keep your trading journal, you document your emotions and decisions in your trading journal, and you try to avoid, fear of missing out, feelings where you trade on your biases. Market is up, fear of missing out, and all of a sudden, you start violating some of your trading rules that are part of your trading plan, such as two most important one are how much cash you have in your portfolio, and the second one is what your portfolio drawdown is, how many positions you have, and what are your stop losses on all of those positions. And in case market does sell off, what would your portfolio look like? So that's trading psychology. How do you trade in current system and current environment? We have 3 different systems or services that we offer at Tradespoon. I like to break them down in 3 different buckets. So before we talk about Tradespoon systems, very important to go over, what are the steps to be successful trade. We already briefly mentioned trading plan. You need to document your emotions and feelings, right? So, are you trading on biases? Are you trading on impulses? Be self-aware, document that, we in a live trading room environment, we do labeling exercise where we label our emotions with 1 word, and you would document that in your journal. Trading plan should include how much cash you have at any given point, how many positions you have at any given point, what are your stop losses, what are your target gain, what are your limit orders are, and then follow 2 more important rules. Structure your trade based on probability of success. Find signals that give you probability, how often when that signal occurs you will be profitable, whatever the signals you're following, whether it's MACDs, RSI, unusual options activity. Always ask yourself, what is the probability that when I enter this trade in the past, that this signal has been successful. Try to structure your trades with high probability of success. At Tradespoon, we'll target across all the models 75% probability. And then based on that probability, you look for return on capital. For day trading, usually we look for 1% profit on the stock. If we're doing longer term trade and we're doing option trades, usually I look for anywhere from 20 to 40% profit per trade if I'm doing the options trade. And then in terms of the signals, again, at Tradespoon, I try to break it down into 3 different buckets. So first one is live portfolios, right? Some subscribers, probably half of our subscribers, are looking for live portfolios. They want to know every time I trade. They're looking for either get an email or SMS message every time I trade, or get access to portfolio on the website. So we listen to everybody. We build this elite trading circle, been on for about close to a year, I think, or actually over a year. Gives you very important functions. One is, if you have time during the day to trade, you can participate in morning bell and closing bell. Right? We have live trading room in the morning bell and closing bell, where you can participate in live trading room and see how either Scott or myself trade on daily basis. Also, trader log gives you access to all of the trades in my portfolio. Right? So if I close the energy today, you can see the spread, the trade. If I close the day trading, I did a put spread and I close the short leg of the put spread, you would see this real time. If I put an order to close LLY position, long-term LLY position, then you would also see that trade. So that's trader log. You also get email and SMS message every time I trade, right? So that's Elite Circle subscription, gives you access to all the functionality we have on the website, but mainly to the portfolio that I'm managing during live trading room, or Scott manages during live trading room. The next portfolio is premium portfolio. Geared towards somebody who maybe doesn't have time during the day to trade and watch the market throughout the day. Maybe you have a full-time job, or maybe you just don't like to day trading. You're looking for more of a longer-term trading. This is where we provide every week. We provide you a signal like LLY, biopharma. In the signal we provide at what you can buy either stock, option, or option spreads. I personally also trade. This is part of the trader log. You get email and SMS message every time I trade. It tells you at what position, at what price did I enter a position, what price I'm trying to close the position, and give you 3 choices. I trade option spreads. This is what I'm comfortable to for long-term trades. Some people only like to trade stocks, so then you would buy LLY at 117, and currently it's trading around 120, right? So it's up 2-3%. And you also get an instructional video if you're new, to kind of give you a rationale of why I'm entering this trade. right? So same thing, you get access to open position, working position, evening videos, historical trades, and every time I trade, enter, exit, adjust position, you would get an SMS message. The third portfolio, a lot of our subscribers are new to options. They don't feel comfortable trading options yet. So, that's been a common question. Oh, you guys are option traders, I'm a stock trader. This is not for me. Well, we do have robo-investor portfolio. This is more of a long-term portfolio consistent only of stocks. I personally trade stock. You would get, again, access to orders, positions. You get SMS message and email every time I enter or exit position. On average, you get one position a week. We're managing anywhere from 10 to 20 positions at any given time. Again, if you're more comfortable trading options or cover calls, I personally like cover calls, right? So then you can also adjust the strategy, but you get a signal, you get a newsletter explaining why we enter a position, which sectors are leading, which sectors are lagging. So you do get, every 2 weeks, you get an update on the positions and new ideas and why we enter into these positions. So that's third portfolio. So we have live trading room, one portfolio that consists of active trader, monthly trader, and weekly trader. So that's one portfolio that I manage. Premium portfolio, option spreads, and robo investor portfolio are stock trades. So you have 3 live portfolios that you can have access either via email, SMS message, looking at the website, trader log, or participating live. So that's one bucket of services. Any questions? Let me know if I go too fast and I miss them. My goal for today is to make sure that all of our subscribers get a chance to ask questions and get an answer. We have a lot of information on the website. If you're new, it can be overwhelming. Just like anything, you need to invest into education. It does take, 7 times to read something to kind of internalize that information. So my goal is to help you internalize information about Tradespoon so you feel comfortable about the services, the portfolios, the tools that we offer on the website. So that's live portfolios. In the live trading room, I trade 3 different sets of signals, either weekly trader, active trader, or monthly trader, all 3. So that's been a common question. The reason why I like to trade these signals, because not only are they based on the models, we also provide you with the model runs and provides you confidence level. How confident is the model that the stock will continue to trade in that direction? So this is an example on December 2nd, model provided a signal buy Tether. So you can buy Tether at 10:07 or buy Tether at 10:42, right? So on December 2nd, if you come in, you can probably, depending on the open price, you would have entered somewhere around $10.07. If you put a limit dollar at 10:07, you would have got it 10:07. Right now it's trading at $10. So again, you have a choice. In this example, on December 2nd, when you come in, if you enter, well, December 2nd, probably you would have, let's see, December 2nd. So December 2nd, probably if you did it on 10:42, then you would be down actually 40 cents, right? So you would be down 4%. If you waited for our suggested entry price based on predicted low, then you would be down only 10 cents. So this is again a choice where you either buy based on the predicted low or you buy based on yesterday's close, depending how aggressive you are as a trader. In this specific example, you would have, if you were patient and waited for the predicted low, you would lower your cost basis. So the benefits of strategies A is that your probability of success is higher. The advantages of strategy B that you would enter positions more often, because let's look at HPQ. On December 2nd, if you entered HPQ, right, at 1951, right, 1951, well, in this example also, if you waited for 1951, we actually hit that during the market sell-off, you would be up by now $1, right? So it's almost 5% up on HPQ. if you did not enter the 2008 on December 08, then you would get up only 2%. So in this example, you know, because we had a sell-off, both entry price were triggered. But there are some examples where sometimes only one gets entered, right? Let's say CVX 116.31. Well, yeah, because of the sell-off. Because of the sell-off, you know, it made sense to wait for strategy A, but sometimes there is no sell-off, so then the price would never get triggered, right? So then that's the question, Vlad, do we always wait for predicted low for strategy A, or do we follow strategy B? That is the choice that you have to be comfortable with. You need to ask yourself how aggressive you are as a trader based on your profile, based on your trading psychology. Are you a risk taker, or are you looking for higher probability of success? Maybe it was lower return on capital, or you want to trade more often. But in this example, well, you just need to make that decision and be consistent. I usually, you know, if I'm in a live trading room, I would enter based on the previous close. So I would do the strategy B unless I see on Tuesday there is a sell-off, on Monday that there is a sell-off. So if you have a question between strategy A and B, you just need to ask yourself, do you want to trade more often and your percentage of winning trades to be less, or do you want to trade less often and your percentage of winning trades to be higher? So that's an example of monthly trader service. You get 3 bullish, 3 bearish trade ideas. You have entry 1, entry 2. If you're managing smaller portfolio, we do give you an option of trading options, right? Give you a choice of trading options. So Teva Pharmaceutical, 100 shares of $9 call, that would be, you have to spend $900. If you have a small portfolio, you can buy 1 contract and it's only $100. So you're leveraging your portfolio 1 to 9. So options allow you to leverage your portfolio. The only disadvantage of the option, well, 2 disadvantages. One is you can be over leveraged. If you don't realize you actually bought $900 worth of stock, right? And if the stock drops by 1 to 5% in this case, you can be down, you know, significantly, you know, 50% stop loss, usually in our position. So from $900, you can go to $450. And if it's 100% of your portfolio, you can be down 50% of your portfolio. So options can definitely, the disadvantage is that advantage and disadvantage that you can be leveraged, right? Or you can be over leveraged if you trade in options. And the other disadvantage, these are monthly signals, you know, for next 50 to 75 days. Usually I hold the position anywhere from 5 to 20 days. You have to be correct on the timing, right? With options, you know, not only do you have to be correct on direction, you also have to be correct on timing. So that's monthly trader service. Again, holding time. Usually I hold this position in live trading room anywhere from 5 to 20 days on average. And I trade option spreads because you know, it allows me to lower the cost basis. And even if option stock is down or flat, I can make profit by buying or selling deep in the money options. Buying deep in the money options, selling out of the money options. So that's monthly trader service. Any question on monthly trader service? Right, then we have active trader. Active trader is a day trading. You can go December 6th, position Google. Again, this is day trading. Signal gets provided before market open yesterday, right? Either buy at 1300 or 1326. Market gapped up today, so both entries did not get triggered, right? Because of the strong unemployment numbers, and that's been also pretty common question. Says, Vlad, you predicted 1300 to be the low, or yesterday's close 1326, but the stock gapped up to 1331. What do we do? Again, it depends on the choice. If you're gonna, I usually in a live trading room, I never chase the stock. So if the stock gaps up, I don't enter, right? Because we do have often reversals. So I wait for it to go back to the previous close, or at least the open price, right? So. But that doesn't mean that's, you know, some people basically always buy at the market open, which is, as long as you're consistent, then just realize it all depends. The higher the price you're paying, percentage of winning trades will decrease, but the number of trades that you do will increase. So it depends on the spectrum of risk taking, where you are on that spectrum. Do you like to trade more often, and do you like to trade more frequently, or do you want to do it less often, right? And then your trading plan, you know, what are your stop losses, what your target gain, and make sure you follow your rules. So that's active trader. Again, you have two choices. Let's see, best buy. Most stocks gapped up to the 80.32. So best buy did not get triggered. Let's see, PLK. Yeah. So today, because of unemployment numbers, the market is up. Common question, Vlad, where did you get this magic 1326 number? That magic number came from Stock Forecast Toolbox. So if you type in Google, $13.26 is overhead resistance and support is 13. So 13.2696 overhead resistance, and that was the previous close. And support was predicted low was at 1300. The stock gapped up today, up nicely, so it's at 1340. So it broke through overhead resistance again because of the unemployment numbers and the market rally. So that's where the 1300 and 1326 came from, right? And if you do want to leverage your portfolio and you want to trade options, let's say for Google, you can buy one contract of 1285 call, and that will be $1,500 as opposed to spending $128,000. You only spend $1,500. Still significant leverage. But how do we find this 1525? So it's the same thing. We look at the predicted low. Predicted low was, what was it again? 1300. 1300 minus the price of the strike price, 1285. That's how we got to 1525, right? You take the stock price, predicted stock price, minus the strike price, and that's how we determine the price of the option. And same question usually happens, Vlad, what if we never reach 1525? What if it was in the live trading room? Again, I usually don't chase the stock. I would buy it based on previous session close or predicted low, maybe give up because of the option price, maybe give up 10 basis points on the stock price or 20 basis points on the stock, but no more. So that's active trader, day trading using stock and options. Any questions about active trader, stock or options? All right, let's go into weekly trader. Weekly trader, different models, all three models, active trader, monthly trader, weekly trader, there are different models optimized for different time period. So on December 2nd, this is MasterCard. Signal was published on December 2nd, basically saying either buy at 282, which is predicted low. If you waited for 282, we actually, right now, because of the rally, the stock is up 4%, right? Doing a weekly trader, or if you waited for 292, if you bought it on December 2nd, well, December 2nd, I think. Yeah, so if you bought it at the market open price, depending what it is, you would probably just be flat. So it's, again, an example where you can be either flat or you can be up 4% if you wait. If you follow strategy A, you would trade less often, but higher percentage of winning trades. Strategy B, you would trade more often, your return on capital would be less percentage of winning trades. So again, 3 bullish, 3 bearish idea, weekly trade. Usually in a live trading room environment, I would trade it as an option spread strategy. And again, if you want to trade options, let's say one contract of MasterCard, you have to spend $27,000, which is you need a large portfolio to buy 100 shares of MasterCard. Options, if you buy one contract of 275 call, that's $700. So instead of spending $27,000, you put in $700 investment. In the live trading room, my stop level is 50%. So I would, at any given risk, I would put only 50% of the option price, and then target gain anywhere from 20 to 40%. All right, any questions? All right, so these are the monthly and weekly trader. So these are the tools like signal services that you can also buy separately, active trader, monthly, weekly trader. You can also buy tools membership. So when I trade long-term, I always look at the seasonal chart and our long-term model that feeds into monthly trader service. So you can see spiders, the model run on Sunday 6 and on Sunday at 6 p.m. Central, basically had a strong signal. 4 out of 4 predictions were lower on Sunday. You can see the sell-off that happened this week, partially due to the news in the market, but also partially that the market was overbought. So the model predicted overhead resistance to be 317. We're at 315. Support was at 306. We were as low as 307. So the model did a good job predicting the trend for the next 50 days and also support and resistance. And you have 91% correlation. So you can see usually in December, based on correlation, we do have volatility the first 2 weeks, which we just had. We experienced 2 to 3% sell-off and basically rebounding back to 317. So this predictions were published on Sunday before the sell-off. So definitely I would encourage you, when you do long-term trading, to always look at the model. I usually don't enter any long-term positions unless 3 out of 4 or 4 out of 4 predictions point to the upside, right? When 4 out of 4 predictions point to the downside, that means model, and then you look at the accuracy, 8 out of 10 times model is correct that market is overbought and you should wait for prediction to pull back. Keith, please discuss down 0.5% on SPX for active traders. So the question was for active trader, basically what I do, how do I determine strategy A or strategy B? I look at the pre-market futures, right? You can go to Stock Forecast Toolbox, look at the futures tab. We show you pre-market futures. If you see pre-market futures went from 31.17, was the low, and went through 31.46 after the unemployment numbers, before even market opens, the market is already up 1%. Before the market opened, you already knew that the market up 1%. So when you go to active trader, you basically know that, okay, if the market is up 1% already, most likely the predicted low, Google will not reach 1300 level. So I could have told you that before the market opened, that Google most likely will not reach 1300, then doesn't make sense to follow strategy A, then I would follow strategy B and wait, for the pullback at least to 1330 or 1326 level. If unemployment numbers were negative and the market was down 0.5% and 1%, then I would say, listen, most likely Google is not going to be staying at 1326. Doesn't make sense to overpaying for the stock. So wait for a predicted low. So again, pre-market model runs on at 6 p.m. Central, right? All of this information is based on prediction that happened at 6 o'clock Central. We have 7:30 in the morning Central Time. We have or 8:30 Eastern Time. We have unemployment number for the months. This is a pretty big event, news, and that drives the market, right? We knew yesterday in live trading room we were discussing that depending on employment numbers, market can go up or can go down, right? We have a great unemployment numbers. Everybody who's looking for a job has a job. Great, market likes that. Market is up. So that can help you before market actually opens, decide which strategy is more appropriate. Yes, so Sophie, correction over or more, correction is 0.5%. So basically it says, what is that? Consider the strategy if pre-market S&P futures are down more than 0.5%. So if they're down more than 0.5%, and same thing for bears, well, there's no bears, but for bears, if it was up more than 0.5%. For bears, I would not do based on previous close. I would wait for predicted high because I know market is up 1%, and most likely the predicted high will not hold. So definitely doesn't make sense to buy it based on yesterday's close. It makes sense to wait for the predicted high. So yeah, so this is market S&P futures. If you go to Forecast Toolbox and you click on Futures tab, and you see that this number is down 0.5%, then I would encourage you to buy them based on predicted low. I would also encourage you to wait for the first 15 minutes for the market to find some stability, because we've seen VIX has been, there's more anxiousness in the market this week, right? We were as low as 11, right? We were near 11 last week, 1138, and this week we're as high as 18. So this is, I don't know, 80% move on volatility, 70% move in volatility, which means that market is more nervous, right? More anxious. Premium in options has expanded. So you need to be cautious and wait for the first 15 minutes because you can have volatile market. All right, we talked about active trader. We talked about, so just to recap, I know I go on. So if you think about Tradespoon subscriptions, I would put them in 3 different buckets, 3 different categories. One is live portfolios. Depending on your style, stock, options, spreads, you might choose one. I encourage people not to do all 3. Again, the first 2 rules that you cannot break, and you need to write them down and hang them on the wall, is 1, how much cash you have in your portfolio. On average, 30% of your, especially if you trade in options and you leverage yourself and you have to be correct on the timing, at least 30% of your portfolio should be in cash. That's the rule number 1. The second rule is look at how many positions you have and what is the max and what are your stop levels on all of these positions. And if all stop levels get triggered, what will happen to your portfolio? So that's called portfolio drawdown. And you need to be comfortable with that number. On average, institutional traders or people who manage other people's money, they say 15%, 20% should be maximum portfolio drawdown. For individual, depending on portfolio size, it could be more, it could be slightly less. It should not be 50%, right? It's very hard to recover from 50% portfolio drop. I would say the maximum should be 20%. Especially if somebody who's new, who's just start trading, doesn't have experience, you should always look at your positions, always look at your stop levels, and if they get triggered, make sure your portfolio is down less than 20%, maybe 10%, maybe 15%. So those 2 rules you should never break. So that's why you don't want to trade all 3 portfolios. So either premium portfolio or robo-investor if you trade stocks, or in live trading room if you have time to day trade. Then those are your 3 portfolios that you can follow. Then if you don't want to follow the live portfolio, or if you want additional signals, you want to make your own choices which stocks to enter, then we have active trader, monthly trader, and weekly trader. Not only do we provide 3 bullish and 3 bearish idea, we also screen them and we give you probability out of the universe of all the optionable stocks, which stocks the model is doing the best job predicting, right? And those are the stocks that we are entering on your list. If you do want more than 3 bullish trade ideas, we did launch Yellow Tunnel, beta aggressive power trader. It's launched, you guys can sign up. It gives you my watch list for all of the stocks that I'm watching during live trading room environment. So you have BLK, Google, so you have beyond the 3 stocks that I'm watching. Again, red means it's oversold, overbought. Blue, it means, or green, it means it's, gold is oversold, 137.66. It's below predicted low. So, if you want to leverage, if you want to hedge, then this is the time to buy gold, right? Because the gold is down. Google is at 1340. We predicting 1326. It's overbought, right? Or stocks that was not on the list, BLK, right? 490s, BLK, I think it was. Which one was not? Maybe VFC, right? The retail, $90.30, predicted high is 1959. It is overbought. So that's aggressive power trader. And then on Yellow Tunnel. And then what else? And then if you looking for tools, then my favorite tools for long-term trading, I look at the research seasonal chart, right? If I want to buy Google long-term, I would type in Google and I would look, right now model shows it's overbought. 4 out of 4 predictions are lower. It basically says wait for the pullback if you want to enter the trade. And stock forecast toolbox if you want to do short-term trading, or if you want to do long-term range, predictions, 6 months predictions for Google. You can also see what is our prediction on Google for the 6 months. We also have different screeners, company screeners on the on the forecast toolbox. We have long-term model, show you which sectors are leading and lagging the market. Here with the confidence levels. We also have short-term screeners. We have long-term screeners, right? So here We have Tradespoon bulls and bears. If you want additional ideas, okay, Alta announced earnings, you know, strong momentum, 4 out of 4 predictions are high, Boeing, you know, some of the healthcare stocks. So you get, you know, more ideas if you want to screen for them here and find, you know, more trading ideas beyond, you know, what we provided. All right. Any questions? So those are the 3 buckets. Just to recap, first bucket, live portfolios. Second bucket are signals with specific entry and exit points and time horizon, and then tools to help you screen, or if you want to enter a position and trade. Forecast toolbox, screeners, and research. We have free education. Education is always free. We want you to invest into education. We don't charge for education, and except, you know, if it's one-on-one coaching, we do charge. But, you know, if you want to learn on your own, I encourage you to read market newsletters. Gives you daily update of where we think the market is heading. We have market commentary, and 3 times a week. We have market brief once a week as a video, and then Robo Street once a week. So you have 3 newsletters, which I think is a great free resource. I would take advantage of that. And then, you know, we have virtual trading account you can practice. We have trading guides, smart trading guides. You know, we're exposed in my short-term trading plan, long-term trading plan that I'm following when I trade in live trading environment. All right, any questions? What did I miss and did not cover? Let me know. If not, a lot of people are already on vacation. Winter break is coming. Andre, Bob, Dara, Faye, Gary, Hayeju, John, Keith, Ken, Marvin, Michael, Patrick, Robert, Sophie, Trader. Thank you guys very much. Have a great weekend. Enjoy your time with your family. Your homework is to open up account at Yellow Tunnel. Go to Market Plan and Trading Discipline. Go through these videos. They are very powerful videos that help you with decision-making process. How do you manage self-serving bias, you know, game theory, very interesting topics that can help you achieve the final stages of trader psychology, right? You will know that, you know, in emotional intelligence, they're talking about free-floating mind versus analytical mind, right? We always switch in different gears when we, as humans, when we think, we go through 2 different mind sets. Our analytical mindset, where we're learning something, maybe we're not comfortable, we're trying to solve a puzzle, or we go through this free-floating mind. And the free-floating mind is, you know, you're an artist, or you paint, you're painting, and you've been painting all your life. When you're painting, you're just kind of, you're in the zone. You don't think, you don't solve the problems. You're inspirational. You're just kind of in the free floating. You know, if you play chess, you train for 10,000 hours, or you play piano and you play piano for 10,000 hours. That's the quote from famous book Tipping Point by Gladwell. You know, when you reach that free floating mind, this is where you enjoy what you're doing, whatever the hobby is, whether it's gardening or yoga or playing chess, but you're kind of in this free-floating zone, free-floating mind, and that's the final stage of the trading. You know, when you are not nervous, when you're confident, when you're not anxious, when you don't follow your biases, but you're kind of in this free-floating mind, that's where you would find the most successful traders are. So the purpose of Yellow Tunnel is to take you through the journey of the stages to become a successful trader. And it's the same stages whether you want to play piano, or you want to become an engineer, or, you know, or mathematicians. You know, if you have a hobby, or if you have a certain skills, you know what I'm talking about. So this free-floating mind that's been covered in emotional intelligence quite a lot in the past decade or 2 decades. That's the goal of the Yellow Tunnel. All right, thank you very much. Have a great weekend. Invest into your emotional capital, and we'll see you on Monday. Thank you very much. Scott will do closing bell today. If you're part of the elite service, Scott will do the closing bell today. Thank you very much. and have a great weekend.